Hello and welcome to Revenue Unscripted. I'm Jennica Dixon, president at Slattery Sales Group, and every episode here we dive into the human side of growth, how real organizations build high-performing sales cultures, avoid costly mistakes, and turn complex deals into predictable growth. Today, Anthony Palladino joins me from Mabl, where he serves as Chief Revenue Officer, leading the company's global go-to-market for its AI-native test automation platform. He brings deep revenue leadership experience from scaling Splunk from pre-IPO through $1 billion in revenue and driving growth at CloudBees and Acera. He started his sales career at Blade Logic and BMC, and he also has a venture capital firm and advises multiple companies. So today, we'll talk about staying agile in fast-changing markets, refreshing ICPs and differentiation, reducing go-to-market friction with executives and boards, and what mindful growth looks like from pre-IPO to post-IPO. Anthony, thank you so much for joining me today. It is a privilege to have you on here, and I am so excited to dig in. Thank
Thank you.
you.
It's great to be here, and thanks so much for having me as a guest. I appreciate it.
Oh, well, before we get into the heavy lifting, I'm curious, can you give listeners a quick snapshot of what you are working on today and who you serve?
Sure. So we're AI native test automation. So we're effectively automating the process of testing software before it goes into market. So you think about that process, it's creating tests, executing tests, maintaining tests, and basically test failure analysis and analyzing what's happening in your environment. So we have a process that takes the function of testing down from this long with this many people into this like this using generative AI and AI vectorization. And we've been fortunate as a company. We're growing at a great rate, growing very efficiently. Great investors, Google Ventures, Charles River, Amplify Ventures, a couple of others, Vista Endeavor Fund. So going at a great rate, great culture, great team, great people, having a lot of fun, right? We were fortunately doing a lot of things with AI before AI became a big thing, especially generative AI. So we had AI built into the product from the start, and that's enabled us to really take advantage of being able to drive 50, 60, 70, 80+% improvements in the test automation process. So we're having a lot of fun. I'm coming up on 3 years actually next week. So
That's fantastic. Congratulations.
thank you.
In the conversations that you and I have had recently about growth and about your growth trajectory there, it has been fascinating to get your insights into growth in fast-changing, fast-paced industries. And you are in the trenches right now. You are really boots on the ground with that. So my first question then, I'm going to launch straight into that. You obviously have grown companies in really fast-changing industries, really just quick moving, things are constantly shifting around you industries. And when that happens, competitors can catch up to the technology you have, your customers' needs can change very quickly. There's not a lot of steadiness. And so there are different ways that a company can approach that. And I've seen various approaches. How do you ensure that a company remains agile and effective rather than reactive and chaotic? Because in fast changing, it can so easily default to reactive and chaotic. So how do you ensure agility without chaos?
I really think that it comes down to the leadership environment that you create. And I'll kind of go off on this a little bit, but I think about creating an environment where the leader is trying to create a place in which the people can run independent of them. So meaning you're not having dependency. You're basically your people. You go on vacation, you go off and spend some time away, and the business will keep running, right? So you have create that level of independence in your leaders and your team. And what that means is that people are aware of what the company's goals are. They're aware of what their job is. They're aware of the expectations, and they don't need to rely on their leader immediately for every single thing.
Right.
There's a lot to it. I think if you think about it, in order for people to do that, they need to have really good training. They need to have a really good support. They need to have good clarity on what's expected of them. They need to have good clarity of what they're doing and how that affects ultimately the company's goals and where they're going. And then they can think on their own, right? They can think about, okay, what should I do in this process? Not what does my leader want me to do, but what can I do? And the other piece of that is, if you're creating an independent environment, that means that people are operating in their own natural energy. You're providing a framework for what to do. You're providing messaging, story, but they're operating in their best version of themselves, right? And that's an easy thing to say, but how do you create that? That's
That was my next question for you.
Yeah.
Please do, because everything that you're saying, I mean, you're describing the dream of making this happen, where the founder can go away for a few weeks and not
Yeah.
come back to chaos.
Right.
A lot of people say it, fewer people do it.
Right.
Tell me more.
I think there's a couple things, right? Sometimes I say to people, when we're talking about strategy on an account or kind of strategy on what we're going to do in the market, I'm like, yeah, I have an idea here, but I'm happy to be wrong. And I don't necessarily want to be wrong, but I'm completely happy being wrong, right? So, and to give you a specific example, I'm very, very big on role playing and getting into an exact dialogue. And usually when we're talking with people, I'm not saying, here are the things to do. I'm saying, okay, let's go into a direct role play on how to communicate with the customer. We've got its current situation and we need to get some more details, or we're unsure of some other risk. It's a new transaction and we're unsure of some competitors. We know where we want to get to. Let me role play with you and give you some perspective on how I might handle this call. And we'll go in and I'll be the rep, right? And we're just role playing it. Okay, you be the customer. Throw all the objections. Let's handle it. And then we'll go through that. Maybe we go through a couple of versions of it, but then we'll stop and we'll deconstruct it and say, hey, well, why are we approaching it in this way? How are we approaching it in this way? So my approach on it is to give an outline of the way I'm thinking about it and the methodology, and then enable the person to operate with that outline and tweak that outline, or operate and communicate in that way that's best with their natural energy. So that's a specific kind of thing that I like to do. And I think people enjoy that because, you think about things like building a champion, and what we do is champion-based selling, right? So, and that's talking about identifying, building, and testing champions. But the way that you could build credibility, where a champion in an account really feels comfortable endorsing you, being willing to go fight for you when you're not there, is coming from credibility. And the way people establish credibility in a CS role or in a sales role is very personal, right? So you got some fundamental things that you need to do, but you want them to be able to operate in an energy where your customer or your prospect is saying, hey, I'm talking to a real person here. They're not following a checklist. They're engaging in a way. They know their product, they know their market, they know their customers. They're listening to me, but they're showing up as a real person. That's a cultural thing for us. That level of authenticity is a core value for us at Mabl. And I think if you can create a framework for people to be themselves and operate within a process or within the guidelines, but they're showing up authentically, then they're not playing to do well because their boss is asking them to do well. They're playing to do well because they're evolving. They're becoming a version of themselves that they want to become, either because that's where their goals are, or because their leader can help them evolve into that role. So there's a different level of kind of flexibility I think you need to have as a leader, to not say do as I do, but here's a way to do it, and the outcome, and let's shape it and figure out what's going to help you to operate in the best way.
Oh, and that takes a lot more time, attention, and thought than SOPs.
It does. Yeah, it does. And it takes a little bit. You're more vulnerable too, right?
Yes.
As a leader, and you're accountable to what's ultimately happening in the business, and you have to create the environment for people to work hard, and be willing to develop themselves, not because they have to, but because they want to, and we've been fortunate that here we have a lot of my leaders that got promoted. I promoted leaders multiple times. A lot of people who are leaders were first individual contributors. We got individual contributors growing and developing, and that's an amazing thing as a leader. That's a great opportunity and great responsibility. But when you can have people develop into something they want to become, and develop, work in a system that enables them to grow like that. It's a very rewarding thing. And it's an important thing, you answered, how do you remain agile and effective? Like, it starts with the leadership culture, and you have a focus on developing people and helping them become a new version of themselves. And you have to be very specific, I think, about putting that in place, and that creates that level of independence. Not
Wow. That's powerful, because what you just described, I would imagine that also boosts retention and reduces turnover, which is an incredible expense in growing
absolutely,
organizations.
absolutely, yeah. Especially if you're in growth, you have you have ramped people who leave the organization and for whatever reason, and there's some natural attrition that always happens, but that's hard to make up for. So
Yes, it is. As you look at everything that you described is just beautiful. As you look at um, putting those, I don't want to say systems, it's almost anti-systems into place. I guess it is systems, not processes. Um, what do you see as the biggest obstacle? Like, if you think back to some situations where you've seen fast changing industries and a company that thinks it's agile kind of go off the rails into that chaos type environment. I've seen it happen before. I'm wondering where do you see the biggest obstacles to really promoting that culture internally where there is that delegation, there's that trust, there are those methodologies in place to help those decision making matrices happen. Where do you
I,
see the obstacles?
I think the big thing around keeping the company centered on the customer and keeping it mindful about the impact, it comes down to the workflow that you're affecting as a company. So you're going to be changing with the technology, whatever the technology is, you're changing a workflow that exists today. And it's very important as a business bringing technology to market that you're aware of that workflow. You're aware of the pains of that workflow. You're aware of the value of that workflow, and the technology you're bringing is going to represent a cultural change, a process change, an organizational change. And if you have a mindfulness around what is that current workflow, how are we affecting it? It may be dramatic. It may be just incremental, but in any case, how are your users being affected? And if you're designing change, you're in an agile way, you're designing that, whether it's incremental or larger changes. If you're true to that workflow, that gives you a good ground to say, today it takes X and Y, Z number of people, and here's a new workflow, and it's going to impact those people with time and resource and availability and produce a different outcome. But if you can think about the actual customer workflow today, then I think that provides a really good grounding so that you're stepping through that. And then once you define what you want to do, then you have to validate it, with your customers in a good way. And that could come in the form of like loving early things and betas, having a labs environment. And um, but it's a good challenge today because that the workflows are changing at a pace that's unlike anything that, I've seen since the mid and late 90s in technology. So it requires a whole different level of agility. But if you have that awareness and mindset that we're here to capitalize on the opportunity and make the customer's life better, then I think that gives you the good grounding.
That is an excellent North Star, and that makes a
Yeah,
lot of sense.
sure.
Wow. I love that. Um, Speaking of fast changing and high growth, I would love to ask you about your current role because you've talked about your growth at Mabel happening more carefully than you might have originally expected. I mean, you've been in some very fast paced
Sure.
environments,
Yeah.
but could you walk us through the advantages of mindful growth, especially compared to, doubling or tripling or quadrupling really super duper fast?
For sure. Yeah, I think mindful growth is a couple of things. Number one, it starts with a higher stringency and accountability in hiring and in ramping. So, from an interviewing process, you're not, you know, the the company that's making the hires always wants to make sure, hey, is this person fit for the role? But the more important thing is that the candidate is being honest with themselves that this role is going to be fun for them. Here's the job and here's fun, and that works well, right? So I think that especially in an earlier stage company, your lanes are wider. You're not, as a salesperson, you don't have a dozen accounts or 20 accounts. You have a lot bigger territory, and you have there may be a lot of things that are figured out, but you have some more room to figure some things out, right? So when you're depending what type of company or what market you're in, someone who was really successful in a much larger company like a Salesforce, in the past couple of years, they may translate into being in an earlier stage, an A, B, C, or D company. But you have to be honest about what that operating rhythm was and what that rhythm will be at the new company. So I think it just requires a different level of hiring, right? Stringency. So we go through very thorough interview process where we're really trying to feel good about the candidate, but more importantly, the candidate feel excited and good about us. We do a lot of role plays in the process as well. And not to just to give the back to my earlier point, to give the person the opportunity to show how they show up with their best natural energy, with things that they've done in the past, so we can get a good calibration. And we don't expect them to know our market necessarily. We don't expect them to know our process, but we want to see how they're operating, what they've learned, give them that shot. So that stringency on the hiring is a really, really important thing. Number one. Number two is the ramping. So every company has a ramping quota in most cases, right? Whether it's 3 months or 6 or 12 or whatever the case is. When you're really mindful of growth and of how you're spending your money, that first 30, 60, 90 days are really, really critical. It's really critical as the employer to provide a really nice enablement process. So we have in-person enablement. There's about 4 days of work. There's pre-work on it. We'll test in there. We're doing a lot of role plays, as you might have guessed. And we're looking at not only the ultimate lagging indicator like revenue, but we're looking at the early indicators of things like, how's the person showing up? Are they showing up with authenticity? Are they showing up with support? Are they showing up with drive and their core values for us at Mabl? And we're really looking at all of those things and grading all of those qualified things and making them quantified. So, and it's very transparent, right? We're sharing it with people before they even join. Like, here are the expectations and your expectations for yourself and our expectations of you. So that ramping process is very, very specific, because as a company you're hiring people, you may hire people that aren't the best fit. It might be amazing people, but not the best fit. So we're trying to make sure we're filtering that out when we're having people join. But and then sometimes people are a great fit, but it's a different operating rhythm, a different system, and we need to coach them a lot, right? So that ramping focus is very different, right? Because every dollar matters ultimately. And fortunately, we've been able to hire people and have them very, very quickly and be, have amazing performance. So that's one of the number one things that I think it starts with, just another level of detail to how you otherwise might go. I think the third piece, I should say, is really a significant focus on leading and lagging indicators. I mentioned quantifying everything we do in the 30, 60, 90, your ultimate lagging indicator is revenue. But if a person's doing great in month 3, 1, 2, 3, then it's all leading indicators at that point, right? And those become lagging indicators, but you have to be very focused on those things. How many opportunities, and we're not really one to say how many emails have you sent, how many phone calls have you made, but we're really looking at a new opportunity creation and how you're doing in those opportunities and how we're showing up and next steps of that. So those leading and lagging indicators are really important. I think a fourth thing would be alignment and frequency of conversation on the overall company metrics. So we're very open about what our company metrics are on our total growth number, our burn rate, our magic number. We can talk more about that too. NDR and GDR, and our capacity model, how much we're assigning and what our expectations around that. So we're very clear on that. Every dollar you spend has an impact, and we want to be able to help people to fulfill and have a great experience and do really well. But we also want to make sure we're providing all the support we can for them to do well in that environment. And I think the last thing on it is for mindful growth is, and this is bigger companies and maybe companies that don't have as much natural alignment. You think about your own focus, you think about your own job, your own team, but to really think about things as the entire company and appreciate your company goals, where you're really going as a company, and how what you do ties into that. We had a quarter. We always say every dollar matters, and we've had times where we were able to hit the number by literally like $1,000. So
Wow.
it's not, and that is every single dollar matters, right? And we're very open about that. And people, when you have that type of environment, then you have people say, wow, like this does matter, like this matters something. And I'm a shareholder and I want to drive the best outcome we can for our company. I want to drive the best impact I can for my customers. But like what I do really, really matters. And that level of transparency, I think, really helps um, the broader transparency into what you're doing in the company and tying that to your day to day. I think that really helps with being able to to grow very efficiently, productively, and predictably.
Wow. I'm taking notes as you talk here. I mean, you're hiring very intentionally. You're onboarding intentionally. You're paying attention to leading instead of lagging indicators. You're making sure there's a lot of transparency and alignment on company metrics. And you're tying the personal into the company goals.
For sure.
And all of this takes a level of patience that, like, how much discipline did it take you to get to that point? I mean, that seems like something that is earned over time and wisdom.
Yeah, that's you're too kind on it, Jennica. You know, I think uh, you know you've if you've tracked companies over the past say 3 or 4 years, you can go to Crunchbase and see company layoffs since 2020. I think they have it starting, and you see companies who are doing 40% layoff, 50% layoff, and we're hiring. We interview a lot of people, and they were affected by this riff or that riff. Hey, we're interviewing some people last week, and like, yeah, they did away with our whole team. You were great for multiple years, and they just did away with it. So that stinks, right? It
Yeah.
stinks for people to go through that, and it stinks for the company, and it's hard culturally to kind of recover from that. And it's hard for your customers too to really see, hey, what's happening over there, right? We're invested with you guys, we're running some business, and you guys are
Yes.
you're having a hard time. So it's really about just being really mindful of what's going on in the market, being mindful of what the funding environments are, being mindful of what your what the board is expecting, and being realistic and honest with them, and then being accountable, I think, is really what it comes down to, right? Where I don't look at this job as um just taking care of the revenue. I look at this job as taking care of the people and the entire company and their families who are depending on us to do that, right? That's their livelihood. It's an important thing, I think, to just kind of keep in mind. If you have that in mind, and translate it down, and you're open and transparent, then it becomes something that naturally is there. It takes some discipline, and some a different level of kind of communication frequency and openness that otherwise you might not have. But I think that the impact of it, the ownership you get among the company, and the results you get are substantially um, substantially more significant than they would be otherwise.
Yes. As I'm listening to you, I'm thinking back to situations where I've seen exactly what you described, massive growth. We're going to go super, super fast. And then, 18 months later, all of a sudden we're laying off people in just
Yeah.
waves. And you're right that isn't without cost. And there is I mean, it sounds good. It sounds good when we say, we hire and we retain and we're thinking about our employees and their families. That is all true. But there's also a massive competitive advantage that you tapped into when you were talking about this a minute ago, where the consistency of your team, where you're not going in major waves, it means you're protecting your company culture, which is an asset. That is absolutely an asset around delivery. It's around how you show up in the marketplace. It shows up in your clients' perceptions of you, and it affects your clients' trust. I
Yes.
mean, you said it a minute ago, and I love that where the customers, your customers are looking at this like, wait, I was just dealing with 8 people and now they're all gone. Like what just happened? And do we need to pull our
Yes.
money and go elsewhere?
Right.
Um, so it's that high growth and then layoff cycle. I've seen that play out, and you're absolutely right. It is not without cost. And I think that's an incredibly strong argument for the measured and careful and disciplined growth that you are describing, which is so cool to hear because even in a high change, fast-paced environment, I mean, this is a beautiful paradox. I love this. Uh,
Yeah. Yeah. No, I'm glad. That's great. Yeah.
oh,
It's a very disciplined way of driving, and, but I think people at the end of the day, people, um, care about the company they're with. They care that
yes.
that their leadership team is accountable, and they care that their leadership team is doing everything they can to drive the company in the healthiest way. And, then every dollar matters, Jen. Every
It
dollar.
does. It does. Especially it helps when they're getting calls from headhunters too.
It does. Yeah. Yeah. Yeah, for sure.
Protects
For sure.
protects your asset. It's funny, change change is not without cost. And more change, fast change, it's that has some unseen consequences, sometimes
Right.
unintended. Um, I I have so many questions for you. I gotta take a look at my list here and make sure.
All good.
I'm gonna keep with the kind of theme of fast paced here because I know that in our previous conversations you've observed that companies in fast changing industries really cannot let their understanding of who their ICP, that ideal customer profile is, and what their differentiators are go longer than like a month or two without being refreshed, which is music to my ears because that's one of the things we do with our clients. And we're always telling them, like, don't put this on a frame in your lobby. This, now that we've done the work to figure out your ICP and your unique value, don't lock it in place. I know you want to, but you've got to refresh this. And we recommend, depending on their industry, let's say maybe every 3, 6, 9 months. And you're saying a month or two in those fast paced environments. What does that kind of refresh look like for you?
Yeah. I think that, the backdrop of it too, right? You think about the way that, AI has changed, ways of working. And that innovation pace has grown. It used to be Moore's law, right? Every 18 months, compute capacity, but now it's like every month, not even, so with the, generative AI specifically, I think it's changed all the ways people work. And back to my original point on the workflows have changed. So, um, there's different kind of adoption paths that companies might have, right? It's a brand new company, their latest approach. Legacy company, they might have technical debt, or, development process might be more of a waterfall, for example, as opposed to fully agile or, fully, cloud native. So, there's different variances of it, but the pace of innovation is faster than at least anything I've seen today. And, technologies are disrupting, the workflow, of how people engage, right? So, um, that is okay. But you have to be very, very closely aware of how that workflow is changing and being mindful of how your users are being impacted with that. So, um, you have to have an expectation that the change is 100% constant, and you have to have an expectation that, your first meeting deck is going to change very quickly. The way that you're describing workflow is going to change very quickly. And back to hiring, you have to make sure you're hiring people who are comfortable with that rate of change, right? That becomes the only constant, for sure. Not a new concept, but a very, very applicable and valid concept today. So, um, I think on changing the, differentiators in ICP, it comes down to how well you can create compelled energy. And, it's a definition we have, and that's, um, I can read it to you. It's the engagement, emotional, and logical of the audience to take priority action in an urgent, specific, and outcome focused way. And it's typically caused by direct, respectful, clear, but problem centered communication, demonstrated, articulated, relevant customer examples and ROI, and a painted picture of the possible with confidence of a low risk approach. So when you think about driving compelled energy, and that's really the focus of what we're trying to do with our customers, so that they're excited to be engaging with us. Then you want to understand what their environment is and how that's changed. And then from a product standpoint, how you're overlaying on that, right? And then you want to be able to speak in terms of differentiators. And those differentiators, we define there's three types. And this is, force management, command and message concept. You have unique, holistic, and comparative. Comparative or functionally, we do the same thing and we do it better than the other competitors. Holistic are things like domain expertise and people you might have in your approach. Then unique are things that are rooted in your architecture that are unique to only what you can do. And there's a specific value prop or ROI associated to that. So I think it's a matter of just being really close to how that workflow is changing and making sure you are articulating your differentiators through an honest, comparative, holistic, unique differentiation framework. And bringing that to customers. And, customers are smart, right? You're in an environment where they can usually test products on their own. And we have trials and, competitors have trials. So you have to be really true to that. You have to be true to what you actually do. And you just have to have the mindset of staying really close to that. There's no, we're going to release a message and stick with it for the year and we'll refresh it next year. You're constantly on it, right? So you're leveraging feedback that you're getting from customers. You're leveraging product feedback. You're leveraging kind of other innovations that we're thinking about. You're leveraging where we see customers doing really well in certain things, and trying to bring more of that to the masses. It's really a full frame awareness of workflow, change in the workflow, and how your product can continue to accommodate the new workflows.
Wow, I love that focus, how their workflow is changing.
Yeah,
Because as things change quickly, that is a ruthless focus on your customer.
it is. Yeah,
And that's
yes,
exactly and I think you were saying that earlier too, like that is where your agility should come from. That should be the North Star of your agility is how their world is changing, not yours. And
yeah.
that's amazing.
It's not about what you think the product can do; it's about what the product can do for them, right? So,
Right.
and helping them to see that. And sometimes customers, you have typically processes are in place as a result of the tools or lack thereof that were available when that process got put into place, right? So as a new technology, you're changing that process, you're adjusting that process, and you have to be mindful of not only what the outcome could be when you shift from current process to a new one, but the path to get them there. So we really focus a lot on the adoption path and enabling people. And we have a whole training course, Mabl. We have implementation architecture and a whole different approach of what good really looks like to guide them on that process so they can enhance that workflow with our technology. Because we know what the goal could be, but helping customers to get through that and that's our opportunity. That's our job, and need to job. And, we've had been very fortunate that we're able to, be the number one transformation or innovation project in the company entirely, like across multiple accounts. We're like, hey, you guys have been the number one innovation, the number one automation solution for us across the entire organization. So I think that's a result of being really true to that, their workflow and enabling a way to take advantage of the way they want to go next.
And what you just described is a deep, deep respect of the amount I of change. Basically, it's a deep respect for the burden that is changing. And I think sometimes, we've worked with a ton of companies and sales teams, and it's not uncommon for them to be so proud of what their solution can do that they underestimate the pain of change in the prospect enterprise, where this like nobody there is looking forward to it. I know we're looking forward to it, but nobody there is excited for this. And if it goes badly, their personal brand internally is at risk, each person that you're
Yeah,
talking to. And so what you just described of really honoring the incredible burden that is change for them, what a competitive advantage that is. That's beautiful.
I think so. I think so. We've had, we work with hundreds of companies, and usually that approach that we have on guiding them on the path it's been a holistic differentiator for us. And think, we've got companies who are starting with us and growing, multiple X within the first couple of months. So, that doesn't happen because we're great. We're great salespeople or great CS people. It happens because we're aligning with them well. And, maybe sometimes a little tough love. Hey, here's your goals. Here's where you guys want it to be. And you're not there. Like, we got to work on this. And sometimes it's, hey, you guys are ahead of it. Let's pour some more resource and reset your goals because you're ahead of pace. That's okay. But that level of kind of involvement and execution, I think, we don't think about it. Another topic I know we talked about was dysfunction that exists between functions in the
Yes.
org, right? So we don't
Yes.
think about it as it's sales' job or CS job or marketing or finance job. Like, we're tied to company metrics, the entire organization is, right? The entire company is. So we raise, hey, we need help on this. We need help on this, regardless of who, what group is needed. Like, there's no, oh, that's not my job. There's no, I'll get to it, when I'm ready. It's like, hey, we're here because of our customers. That drive is a core value for us. And I think it shows up in how everybody comes to work.
Well, that'll get everybody rowing in the same direction.
I think so. Yeah, I think so.
That's fantastic. Wow. I'm aware that just to honor your calendar, I'm going to need to land the plane soon here, but I do have another question. I'm curious about the IPO event because running a sales organization or running revenue in an organization, I should say, may look different pre-IPO and post-IPO. So are there any particular sales related, challenges or assumptions or blind spots that founders and leaders should be aware of as they progress along that path?
Yeah. So it's a great question. Let's unpack it, right? If you're a public organization, then your process of structuring and approving orders is different. How's it different? You're probably going to have a deal desk team. The deal desk is comprised of finance people and maybe may have people run the deal desk. They've got behind them accounting. They've got behind them auditors, external auditors. They've got your chief accounting officer, your treasurer, and they're looking at how the structure of this transactions affects our revenue and how we can actually book this revenue and do it cleanly and without any type of exceptions, right? So you've got a process. There's a lot more stringency on it. You've also got a very, very, you've got the SEC guidelines on how you're reporting revenue, when the clock stops and starts. And, there's a very, very specific set of expectations and rules of how you need to effectively run the business and run your books. So as a public company, there's a lot more process around it. And as a private company, you don't have the SEC, you have shareholders and you have your board, but you don't have a quarterly, you're running the business quarterly, but you don't have the same level of like impact of your revenue, right? So there's not a wide audience that your stock price can go up or down. So you have a little more flexibility, right? And the reality is that's good as a growing company because you might be figuring out different ways of structuring things. You might be figuring out different ways of driving your transactions, payment terms, and different ways and mechanisms for structuring the deals. But at the end of the day, the way I always try to think about it is, let's run the business as though we were a public company because that's just good hygiene. It's just good cadence. It's a good rhythm. Because if at some point you become a public company, it's just it's another day, or if you're in a growth company, you're going to have a funding event, or you may have a strategic acquisition, and they're going to look at your accounting and look at the way you run the business. It's still GAAP, right? It's still generally accepted accounting principle. So that's not optional whether you're pre or private. It's still a IPO or post IPO or private. So you still have guidelines on it. So my hygiene and cadence is always running it as though we are a public company, and so that you don't have to worry about any type of nuances in your accounting and in the way you recognize revenue and treat people and compensate and things. So, but it's different. It can get tempting as a private company because you don't have as stringent and as many checks and balances, as many people weighing in. But you just have to have the discipline to make sure you're booking good revenue that's adhering to what or supporting what the customer needs, but also, within the confines of how you can recognize it in a good way. So
Wow, I love that. So run that like it is public. Um, what if you were to give a founder just, quick high level advice on what they could do to improve that hygiene when they are booking revenue? What are maybe one or two tips that you would give them for improving that? Because if they've never walked that path before, um,
yeah,
I'm curious, what would you tell them?
uh, I think um, I think leverage your CFO or your outside CFO and your accounting firm to give you good guidance on how revenue can be booked and managed, and make sure your team that would be number one, and number two, make sure your comp plan um, reflects what good looks like, right? So, uh, so you for just as a simple example, if you're paying an account team for pilots, right? They're not real revenue. They're just kind of a service revenue, and you're paying them the same you would for a license subscription. Then you may wind up booking a bunch of those, and that might be okay if you say that that is a conversion opportunity to move it to regular revenue. But if you start booking those and a lot of those, and you may have you, you have a bunch of revenue there that might not convert, or you have a bunch of revenue that you can't really recognize as ARR. So I think you want to make sure your comp plans and your incentive plans are aligned with who runs the company, uh, and then so you're all on the same page.
That is great advice, those 2 things. Wow. Yeah, get the CFO involved early
For
and check
sure.
the comp plan. Check that
Yeah.
comp plan. Man, that's a very good point. Wow.
Yeah.
Okay, thank you. Yeah, my brain didn't go there when you were asking or when I was asking about that, so I'm delighted. That's very good insight. Um, I'm curious before we wrap up, I do have a question about I sometimes you and I have joked before, especially in the age of AI, everyone is hoping for the death of a salesman. Like we're hoping that it will finally happen. I have heard every possible iteration of that from my childhood onwards. Every time there's some kind of new technological development, they're like, "Yes, a machine can finally do it. We can get rid of our sales team." Um, and it's just kind of a black box. Sales is human. There are variables, and those variables are really hard to mitigate because humans are hard to mitigate. Um, and so I'm curious, in your experience, have you seen unnecessary friction between the go-to-market team, when it involves humans? So I'm thinking specifically when humans are part of that go-to-market strategy, there are human sales teams out there in the marketplace. Um, have you seen unnecessary friction between the leaders, like the executive team or board, and the go-to-market function? And I'm curious if you have, how have you seen that play out and maybe affecting revenues or margins and growth? Because i- that kind of friction can really affect
You
the
mean like
company.
the friction between functions like sales and marketing or sales and product?
Yeah, and it can come from a variety of places, but I find that unnecessary friction can really drag on a company. I mean, it's like putting up a sail when you're trying to take off. And I'm curious, where have you seen that? Do you have examples of where that friction between functions can exist, and are there things that executive leaders might be able to do to avoid that
Yeah.
unnecessary friction?
Yeah. I think it in the absence of um, a really well-aligned executive team, it can present itself very clean, very, very quickly, right? So if you think just, for example, sales and marketing, if you say marketing, your job is to create leads, marketing, your job is to drive traffic, marketing, your job is to make sure we're, positioned well with analysts and get some good press releases. And I mean, marketing does a million things, obviously, but if you put them in a situation in which their job is specific to only their function without any awareness of how their function is affecting the rest of the organization, that can really cause some impact, right? So then you could have a temptation for a market to say, well, hey, we had a goal and we hit our lead goal and sales couldn't convert. This is a sales execution issue. Or you can have a sales goal saying, hey, yeah, you guys gave us a bunch of crappy leads and we couldn't convert because they were crappy. Just like this, right? So, one of the things that we do is we focus a lot on magic number. So magic number is the total cost for sales and marketing expense of a prior quarter compared to the revenue growth in the current quarter. So literally, I mentioned this before, but every dollar that we spend, expense dollars, people cost, subscription, comes out in magic number. And that's what marketing and I are signed up for. We sign up for improvements to conversion. We sign up for improvements in execution, but we sign up for those things together because the magic number is really what tells that. So we're aligned on that. And then so there isn't an opportunity to say we created leads, you didn't execute. Because if we did, then okay, great. You're still the magic number if you didn't execute, where the lead's not good, or the sales need more training, or where where we not being honest, we have bad expectations on it, but we're assigned on it together. And then as a company, between sales and product or marketing and product, where everybody's tied to growth, they're tied to GDR and NDR, they're tied to magic number, we're tied to burn rate. So we're aligned. The product, if the product does a great job of adopting, driving the new workflows and, having great impact, great, beautiful. But if it doesn't, then that's going to show up in execution. It's going to show up in magic number. It's going to show up in growth. There's only so much you can do about it, to try to sell your way out. So you have to be aligned. And I think that alignment is where it really comes down, right? But that has to be very deliberate from the executive team to make sure you're on the same page and you've got a really strong dialogue and relationship between each other. You're going to have moments of frustration, but one of the expressions I like to use is there's nothing we can't do, but there's nothing we can't discuss as long as we do so with respect. So, hey, something to talk through, great, let's talk through it and, get it out there and talk through. One of our people ops person says, put the stinky fish on the table. That's her expression on it, which is a good one. Ari does a nice job with that. But
I love that.
Right? Because we're ultimately all tied to those metrics. So
I'm noticing a theme of transparency with you.
for sure.
Because I caught as you were talking, clarity around how their function affects the rest of the organization is critical. And I think silos aren't necessarily something we build. I think there's something that can
They emerge.
build naturally over time.
Yeah.
And that awareness of how my function affects the rest of the organization. And like you said, everyone is tied to growth, to the magic number, to burn rate. Everyone's tied to that. I think that the amount of transparency that you're using to drive that culture is phenomenal. And that's hard. That's pretty radical transparency. Not a lot of organizations do that. That takes intentionality and thought.
For sure. Yeah. And we have a core value of support, as well, which means it's inherently like we're there to support one another. No one wins at someone else's expense. We can't. We have to win together. And that even applies from one sales team to the other, one salesperson to another. Like, this is not about favorites. It's not about, one team being better than the other or earning more accolades. It's like we win together. You have to think that way today. There's too many other factors beyond your control. You need to put your energy into doing a great job externally, not internal
Yes.
stuff.
Oh, it's such a drain on energy. Oh my goodness. Well,
Yeah.
I want to make sure I honor your time, and we only have a few minutes left. So I have one final question for you. 30,000-foot view. If you could give one piece of advice to a founder who is looking ahead and saying, I need to triple this year, but now that they've heard you, they're thinking maybe I need to do it a little bit more carefully, more slowly. What would that piece of advice be for them if you've got a founder?
I think the number one thing I think about on that is validating that you've got a product market fit that has been proven to be able to be sold by other salespeople other than the co-founders. So meaning you've got maybe a dozen customers and, you of those dozen, 6 of them were friends and family and just close relationships and sold by the founders. But you've got 6 of those sold by salespeople, or maybe 1 or 2 or 3 salespeople who've been able to execute without the co-founder involved in the cycle. It's an old model that David Scott put together. And it's called the 0 to 100. But it was that model of ensuring that you've got product market fit and you can sell the product without having the founders directly involved. When you can do that, then you're basically know what that profile of the person is, and then you can add more capacity onto it. But if you have only a couple founder-led sales and you haven't been able to prove that non-founder-led sales model, then pouring more gas on it, you're gonna cycle through probably a lot of different salespeople and a lot of cost until you figure out the pattern of the right person, the right message, the right model, the right go-to-market strategy. So that would be my one thing, Jen.
That is gold, and I can vouch for that. I have seen what you just described play out in the marketplace, and listeners, just go ahead and go back 30 seconds a couple times and just repeat what he said, because that is exactly on target. I love that. Anthony, thank you so much. This has been an incredible conversation. I appreciate your transparency again. Thank you for sharing so much with us. This is incredible value. Before we go, where can people connect with you or learn more about Mabl?
Sure. Connect with me on LinkedIn and Mabl@mabl.com. So happy to engage and get a very thorough way of introducing the product and talk about what we're doing with AI. And I think usually it's pretty well received. So happy to engage.
Awesome. Anthony, thank you so much. And for our listeners, thank you for sticking with us. That is it for today. Make sure to follow so you don't miss the next episode, and share it with another leader if you think that this might be helpful for them. And we will see you next time. Thank you.
Thank you.
Bye.